Back on Morning Mover. Shares of Meta platforms have continued their pullback from all-time highs. Meta down almost 4% this week. Now, the company did announce plans to launch a standalone Meta AI app in Q2 and test a paid subscription service to compete with OpenAI and Alphabet. The company also in talks with Apollo Global Management to lead a $35 billion financing to build U.S. data centers. Shares of Meta currently 11% off all-time highs set just 2 weeks ago. With that, time now for Options Corner. Joining us now to take a deeper look at Meta, we've got Rick Ducat, Duke of Data, lead market technician here on Schwab Network. All right, Rick, what are the trends that you are noticing on Meta's chart?
Yeah, so we had a nice push to the upside recently here. Notice that the price was trending upward for a while before encountering some horizontal resistance here at this light green line near about 630. We can see, though, that we had a sharp rally. It took us to those all-time highs near 741, but now we've declined. We took out our previous lows from here near 675. We're below our 21-day exponential moving average, and we closed below our predominant trend line here, this downward sloping short-term trend line yesterday after a false breakout here. So now the next step would be to test the orange 63-day EMA near about 647, with the ultimate support being near about 630, Diane.
All right. And then what about any recent notable options activity that you may have seen?
Yes. So February 28th options expire today. March 21st is actually a good deal more active, though. February 28th, you'll notice like 10% of the open interest on the call side is extremely far out of the money, 990, 1,000 strikes. So I wanted to focus more on the March expiration here, but 680 to 730 on the call side, 600 to 690 in general are the active areas for kind of both of these option series. A couple big trades did catch my eye yesterday too as well. In terms of dollar amounts, these were the number 1 and number 2 trades. Someone sold $14.5 million of the December 19th 500 strike calls yesterday. Probably a closing trade, I would think, because the calls are so far in the money. Not sure where it opened, but they got out at a good time. The stock price fell about $12, $14 or so since they closed that trade. The other trade was an opening trade by selling the 675 calls in March 28th for $3.2 million worth, Diane.
All right, that was some recent notable options activity in Meta. Thanks a ton, Rick. All right, time now to take us through the example trade. We've got the one and only Tom White, co-host Fast Market and senior options contributor. All right, Tom, how would you structure an example trade for Meta, especially given some of the recent pullback that we've seen?
Well, you're in correction territory now, Diane, on the stock. Closed about 11% off those all-time highs that we saw earlier this month. So we've seen that pullback. On a valuation basis, it's still right in the middle of all the other Mag 7 names as far as valuation. I think a key area to look for is the 50-day simple moving average, which is about 649.50. We haven't been below that for about a month now. So that might be an area of support on this pullback that we've seen here. So I looked at something that's shorter term, about 3 weeks till expiration, where I can take advantage of the higher implied volatility. Because of that 11% fall that we've seen over the last couple of weeks, implied volatility levels have started to expand, option premium expand. So I looked out in the March 21st monthly cycle, so 21 days to expiration. I'm going to sell the 640 strike put. That's out of the money to the downside by about $22, and then buy the 620 put. So a short $20 wide, neutral to bullish put vertical. I'm going to collect roughly about $5 credit on it. So that's what I can make on this trade, about $500. But the key is it takes my break even where I start losing money on this type of position all the way down to 635 to the downside. So you've got nearly $30 to the downside to get to that break even. You profit in 3 out of 4 scenarios on this one, giving yourself a cushion. That break even, over 60% probability that Meta is going to settle above that at expiration, which is what you want on this type of position. And this is one of those strategies, if you feel like you've missed the run up, you see a pullback, start selling put verticals to the downside, staying risk defined on a week-by-week or month-by-month basis if you think the stock's going to stay above a specific price point.
Tom, is there any risks or event risks that you have to pay attention to over the next few weeks, since this is 3 weeks out? And how do you adjust managing that? I know you said this is a risk-defined example trade.
Yeah, the idea is that you let it go out worthless, right? And you keep that $500 that you collect on this type of position. It is risk defined, so you know exactly what your potential downside, which is about $1,500, but that's all the way down below 620 at this point. This is one of those strategies you just want to let time decay or theta that's positive in your favor take hold of this trade as it contracts on a daily basis. Just got to make sure that it stays above 640.
Make sure it stays above 640 for this example trade. Meta Platforms in focus today. Thanks a ton, Tom, for that example trade.